What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about Broadcom, ticker symbol AVGO. This has been a very popular stock because they are going to be reporting earnings later this week. And I've been getting a lot of questions on this company, so I figured I'd do a video. We haven't really touched on Broadcom all that much. We've talked about it during our live streams, but I've never really done a dedicated video on this company. So we're going to take a look at the earnings expectations, intrinsic value calculation, of course. We'll take a look at the all fundamentals, every single thing, revenue, earnings, margins, cash flows. Everything is going to be discussed in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. Don't forget, there is a 16% annual discount available till the end of this month. So another 3 to 4 days left if you want to take advantage of that. And of course, get access to all the alerts and all the members only private videos. And we do have our Labor Day sale starting a little bit early. Coupon code LABOR4, and that's going to give you discounts for fundamental, technical analysis, options courses, and even the bundles are all 50 to 60% off. So links are going to be down below. Coupon code LABOR4 if you want to take advantage of that as well. So this right here is going to be the earnings expectations for Broadcom. $10.43 on a non-GAAP basis. GAAP basis $8.16 with revenues just shy of $9 billion with 19 upward revisions for the company in the last 90 days, and they are going to be reporting on August 31st after the markets close. The stock price has been nothing but absolutely beautiful since 2010. It has been on a consistent bull market here, going from $10 to almost $900. That's an 8,500% increase during that time. Just absolutely incredible chart. This is exactly the whole idea of investing, right? You want something that is not going to be stressful. You want something that's consistently moving in the right direction. You want to be able to invest in these types of companies more passively and then just really forget about them. 10 years later, 20 years later, you are up 9,000, 10,000%, right? That's one of the most beautiful things with investing, is that it can really accelerate your accumulation of wealth, can really generate wealth, right? Saving is not going to get you there. Investing will. So talking a little bit about the company's fundamentals here, by the way, they do operate in the semiconductor chips sector, very similar to AMD, NVIDIA, a lot of these companies. Semiconductor solutions and infrastructure software are the two main segments, but semiconductor solutions is primarily how the company generates revenue. These are some of the business segments. So broadband, end-to-end solutions when it comes to connected devices, customer premises, service providers. This right here, wireless, mobile device connectivity, industrial, automation, renewable, and automotive. And we got software enterprise class solutions as well, with respect to cybersecurity, identity management, and payment security as well. So there's a lot of different businesses within Broadcom that they operate in. This is the revenue. Absolutely phenomenal growth here, going from $20 billion in 2018 to over $33 billion as of last year. And gross margins have been very stable, very strong, consistently growing from 66-67% to over 75%. And free cash flow also growing from just under $9 billion to over $16 billion in the last 5 years. And adjusted EBITDA has also gone from $11 billion to $21 billion. It's more than doubled, almost doubled in the last 5 years for the company as well, right? So very strong numbers, very high quality. And you can go back even as far as 2013 when they were doing $2.5 billion. That's grown to over $33 billion. That's over a 12 to 14x growth. Gross profits gone from $1.2 billion to $25 billion, and operating income's gone from just about $500 million to over $14.2 billion. So very strong metrics here. Every single metric moving in the right direction. You can see the bar graph. This is just beautiful, right? This is what we look for every single year, consistently growing and of course moving in the right direction. Now moving forward to actual bottom line. So net income has been a little bit more back and forth. It's not been as consistent as the other parts of the business. So it's gone from like 552 million to almost 11.5 billion. So it's still grown in the last 10 years or so, but obviously that volatility with that fluctuations. Some years it's been profitable, some years, 2016, for example, generated losses, and then we started to see significant decline in 2019, and then once again started to reaccelerate back in terms of that profitability. Shares outstanding have been pretty stagnant, I would say, since 2018. They've been around 430 million, but of course in the early years they were diluting a lot of shareholders. EBITDA has also moved in the right direction from 765 million to almost $20 billion for the company as well. Very strong margins, 74% gross margins. We've got EBITDA margins at 57%. Net margins almost 40%, and return on common equity, capital, and assets is also fantastic. And take a look at this. Net income per employee, $684,000. That's up from about $363,000 on a 5-year average basis. The company is becoming more and more efficient. That's a very good number right there because their net income's growing. It's actually almost doubled in the last in the last year compared to their 5-year average, with fewer employees, right? So that's a very, very good sign of efficiency, operating efficiency from the company. Now, when it comes to balance sheet, I'm actually quite surprised. The company does have a lot of debt, almost $40 billion worth of debt. Cash is sitting at $11.5 billion. Net debt just a little bit under $28 billion. So it doesn't really make them super appealing from a balance sheet perspective. Current ratio, quick ratio is good at a little bit over 2, just under 2 for the quick ratio when you take inventories out. And debt to free cash flow is sitting at 3.6. So we look for this number under 3. So free cash flow is good, but they do have a lot of debt, which is actually a little bit surprising for a semiconductor company with such high margins. This right here is the valuation. So despite the fact that Broadcom's trading at an all-time high, I would say on a price to earnings basis, valuation is actually quite reasonable, still higher than its 5-year average. We've got price to sales sitting at just a little bit under 10, close to 10, price to cash flow at 19 to 20 times, right? So it is still a little bit of an expensive stock from a price to sales perspective, but other metrics, cash flow perspective, earnings perspective, it is a little bit reasonable, not really cheap, but not expensive either. And this right here is going to be those earnings expectations from $42 expected to grow to over $58 per share. So if you plug in these numbers, so 42 to 58, if you plug in those numbers here, let's just do 42 to $58 by 2027 we're looking at. So for 52 to be precise here, and 42.12. And that's going to be in 2028, starting in 2023, I believe. Yep, so actually 2027 was correct there. So that's going to be an 8.5% growth for the company over the next 3 to 4 years. And again, we're going to go and plug in 431 since 2017. In 2022, we're sitting at 420, so it's about 0.5% share buyback every single year. So we're looking at net income of just over $17.6 billion on a non-GAAP basis. So if you plug in, let's say 8% growth rate for the company, the P multiple, I'm not going to go with 20 because 20 seems a little too high for a company that's actually growing or expected to grow by 8% over the next 3 to 4 years. So that again is going to be in the mid single digits, low single digits for growth rates. So I'm going to go with, 14 to 16 times earnings multiple. So let's just do 16. That PEG ratio is going to be pretty expensive at 2. Discount rate, I mean, they do pay out a dividend, I believe. So that 2% dividend. So we can go a little bit lower on the discount rate at 10% margin of safety, and about 0.5% in share buyback. We come down to the fair value of $567, and right now it's trading at $851. So we are certainly a little bit more on the expensive side. A lot of it has to do with the price to earnings multiple compression. So PE multiple coming down from 20 to 16. Look what happens if I jump that up to 20. Fair value jumps up to $709, right? And market might be pricing in a little bit of a higher growth rate as well. Maybe 10% is what they're pricing in, and now we get up to 777. Maybe 12% is what the market's pricing in. And now we're getting closer and closer. There we go, $850 right on the dot. So this is what the market is pretty much estimating, 12% growth rate and a 20 times PE multiple. That's exactly where it's trading at the moment. But I'm going to be, again, a little bit more conservative with the analyst estimates, and of course, pricing in from what I know in terms of price to earnings multiple, I'm going to be a little bit lower, and my fair value is going to be closer to $567 per share. Now, in terms of technicals here, this right here is going to be the technical analysis. Very nice, consistent uptrend. It's coming up to its higher high, so every time it's gotten up to that level, it's seen a little bit of a pullback. So right now we are once again sitting at its higher high, and that's going to be sitting roughly at around $1,000 per share, and support level is going to stay put down to 649, 650. So this right here, very nice potential support, previous resistance. It's not been validated yet, but old resistance levels do turn into new support levels. So that's going to be a level to watch, and of course all the way down to low 400s is where I would be very interested in potentially dollar cost averaging or starting a new position in this company, because we've got that confluence of this higher low within that uptrend, and of course we've got that previous horizontal support from the October 2022 level as well. I mean, since then, it has rallied a little bit over 113%, right? So very, very strong momentum back higher. However, I'm still concerned a little bit about the balance sheet. So that's still going to be something that we will look into eventually. But right now, again, low 400s is going to be a level where I do believe Broadcom is going to be undervalued at those prices. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget, link to our Discord Patreon is going to be down below with that 16% annual discount. And of course, the Labor Day sale is on, coupon code LABOR4 if you want to get access to all these courses, and of course get access to all the video lectures and member benefits as well. So as always, happy investing, and I'll see you all in the next video.